Welcome, accounting boffins. You are with Ashraf Patel. Our focus of our lesson today is cost accounting. Right. So, if you think about cost accounting, what goes through your mind? Let's look at this here. Have you ever considered this? How some businesses make items? That means they manufacture products. Whereas, how does the owner work out how much to sell that item for? So this is just something for you to think about, okay? Think about your trading concern. In other words, if you look at it this way now, a business that makes products and sells them is what we call a manufacturing enterprise. In other words, it's a business that's making a product in order to sell it, right? Then, when you're looking at manufacturing enterprises, they are different to trading enterprises. Why are they different? Look at this here. Because there are different costs to consider. Remember, when you're making a particular product, you've got to identify all the costs that go into making that product, and that is important. Okay, so now, it is imperative, meaning it is of utmost importance for a manufacturing concern to do a costing accurately, because they need to know exactly what is the cost of making that product. Because remember, once they have the correct cost price, they will therefore be able to determine the correct selling price as well. And that is what this entire section is about. What is it about? It's about the costing process, and therefore our focus is on cost accounting. Got that? Okay, so that's an overview. That's just an overview of what you can expect. Now, let's do a comparison between a trading concern and a manufacturing enterprise. In other words, look at this here. Your trading enterprise, you buy goods, right? And obviously you've done this already, so you know that your cost of sales will be the cost of the goods that you have purchased. So you've bought those goods, you're going to mark them up, and you're going to sell them. Obviously you're going to make a profit. That's a trading enterprise. When it comes to your manufacturing enterprise, the costing is done by you. In other words, you determine the cost of sales. And you'll see later on, when we go into the actual ledger accounts, how the cost of sales figure is derived from all the processes that we put into place. Okay, so that obviously you will work out, or you will derive your cost of sales, and also giving you the value of your inventory. Now that is primarily the difference between a trading concern and a manufacturing concern. Okay, let's take any product, right? If you look at this watch that I'm wearing, what are the cost components that go into making this particular item, right? One will be your materials. What material went into making that particular product? Okay, one. Number two, you have your labor. Okay, obviously you need human resources to make a particular product. Yes, with mechanization, you have robots as well, but remember, primarily you have the labor component into making a particular product. And the third component that you look at is factory overheads. Now we're going to be dealing with each of these components so that you can see what goes into this, how does it impact on the manufacturing of a product. Okay. So what do you have to remember? What are your keywords? Remember, when we're talking about materials, we're talking about the particular material that you are using to make that product. For example, if you're making furniture, we're talking about the wood, okay? So that's what we call our direct or our raw material costs. Clear? So, what about the glue or the adhesive or the nails or the other products that you are using? That would fall within the category of your indirect materials, and we sometimes refer to this as your consumable stores stock. Right? So, think about it. We're manufacturing furniture. Your raw material obviously is your wood, and obviously, like I've alluded to, the other indirect materials that go into manufacturing that particular item. The next component, we've dealt with materials, is the labor component. Now, obviously, you have people working in the manufacturing process, people that are directly involved in making that particular product. That's what we refer to as our labor component. Okay, now here again, notice you have direct labor and you have indirect labor. So direct labor would be those employees or those workers that are actually making the furniture, right? They're directly involved in the production of that item. At the same time, think about your factory. You've got a factory foreman, or the factory cleaners, or the factory support staff. Are they making the product? Definitely not. Are they working in the factory? Certainly. So you can clearly see a distinction between your direct labor and your indirect labor. Clear? Wow, got that. Brilliant. Okay, the next one that we talk about is my factory overheads. Right. Now, in order to manufacture a product, you need to have premises. So there's factory rent. Obviously, there's machinery in the factory, and that machinery is going to be depreciated. Remember, you've done depreciation early on in the curriculum. So think about it. You're going to get depreciation on your plant and equipment of your factory. You're going to get factory rates and taxes. So all those costs that cannot be directly apportioned, like you can't say this is to the product. A portion of that cost will be apportioned to that product. And that's what we refer to as our factory overheads. All those expenses that are incurred by the factory. Okay? So, operative word is factory overheads. Concentrate on those costs which are associated with the manufacturing process but cannot be directly identified. Okay? So, yes, it has to do with the factory, but you can't, it's unlike your material which you can identify. There's the wood that's used to make the product. But when it comes to factory overheads, it is part and parcel of the cost of making that product. Okay, so this is also a cost account. Clear? Okay, now, what are the three components that go into the manufacturing of a product? What are they? Think about it. One, you have your direct materials, right? Number two, you have your labor. And number three, you have your factory overheads. So clearly you can see that these are the costs that go into the making of a product. Clear? So if I have to ask you a question at this point and say, identify three cost components that you will have that relate to the making of a product, your answer should be direct materials, direct labor, and your factory overheads. Okay, great stuff. Let's carry on. As you can see what we've done here for you on this slide, we've shown you that all of these cost components are what we call our production costs. In other words, these cost components will affect the cost price of that product. So you've used so much of material, you've used so much of labor, and your factory overheads component is brought together to give you the actual cost price of making that particular product. Okay, so our keywords that we have to know. Number one, production costs. Again, the emphasis is on direct materials. Number two, direct labor. And number three, factory overhead. So here you can see that if you're making a particular product, what are you looking at? You're looking at the direct material, you're looking at the direct labor, and you're looking at the factory overheads. Okay. When you're looking at your stock accounts, you're gonna have three stock accounts when dealing with manufacturing. And these are one, your direct raw materials stock account, right? That account obviously deals primarily with the materials that you have purchased. Number two, your work in process stock account, which we're going to come back to later, but we're just identifying them now so that you have an idea of what we're talking about. And number three, your finished goods stock account. So these are your stock accounts. Remember, they deal specifically with stock. Okay, so in other words, let us look at these categories of costs. In other words, what do we mean by fixed costs and what do we mean by variable cost? Fixed costs are those costs that remain fixed irrespective of the number of units that you have produced. Let me illustrate by means of an example. Your factory rental, whether you manufacture one product or whether you manufacture 1 million products, the factory rental will remain fixed. So that would be a fixed cost. Okay. Then we move on to variable costs. What do we mean by variable cost? By variable costs, we mean those costs that vary with the level of production. In other words, if you as you increase your levels of production, you're going to need more material. You're going to need more labor. So clearly you can see that those become your variable cost. What do we understand by that? The variable cost varies with the levels of production. Okay, guys, we're going to take a quick ad break. Don't just stray or go away, because when you come back, we've got interesting stuff for you. See you just now. Welcome back, accounting boffins. Yes, we're busy with cost accounting, and now we're going to specifically look at the new ledger accounts that obviously you haven't done before. So now it's a time to have your wits about you, make sure that you follow us and you understand exactly what we are doing. Okay, so in terms of our new accounts, we'll be dealing with cost accounts, and we'll also be looking at the nominal accounts. Now remember, the nominal accounts you're au fait with, you've seen them before, but we're going to show you exactly how we deal with them when we're operating a manufacturing concern. Okay, so now, when you're looking at your balance sheet accounts in terms of stock, we're looking at one, the raw materials stock account, one. Number two, the work in process, right? Very important account. You will find this account in every single accounting paper because it's the crux of the section on cost accounting. Then you have your finished goods. Obviously, you can, its name tells you that you're dealing with goods that have you completely manufactured. They are finished goods. In other words, these items are produced already. And then obviously, consumable stores. Now, just to give you an indication, consumable stores you've dealt with earlier on when you did adjustments in a trading concern, so your existing knowledge will assist you with this one here, namely the consumable stores. But as I said, we'll go into each one of them so that you have a clear picture of what is expected of you. Right, now you come to your second category of accounts, and these are your cost accounts. Okay? And of these, you have 5 cost accounts. Let's go through them. Number 1, you have your direct material cost. Number 2, your direct labor cost. Number 3, your factory overhead cost. Now remember, these 3 costs here deal directly with the production of an item. If you recall what we said earlier in the lesson, is that there are 3 cost components to the manufacturing of a product. What are they? Direct material, direct labor, and the factory overheads. Okay, then we went on to 2 new cost accounts, which we will be dealing with as well, and that's your selling and distribution cost and your administrative cost. Just a bit of information on that one. Think about it. Once your item is totally manufactured, you now need to sell it. Obviously, there will be costs involved in selling that product. And also, in your factory, you've got a section of your factory where the admin section is being concluded in terms of your paperwork, etc. So those are also costs that you have to pay for, and that will be your administrative cost account. Okay, so clearly you can see that these 3 deal with production, and the other 2, selling and distribution and admin, deal with the profit and loss component. More about that just now. Then, the normal flow of accounts that you've experienced in your life as an accounting student. You have your salaries account, your depreciation, your rates and taxes, your water and electricity. Those are just accounts that we will show you how we deal with them. Each one of them will impact, and you will see the flow of information moving from these accounts into your cost accounts, and then finally into your work in process. Okay. Now let's look at the flow of information. When a business buys stock, let's do this like this here, so you can see what I'm talking about. So here's your stock account. Okay? And we're not going to do the detail of the stock account. We're just going to look at it as an overview, because we will be going into the specifics in the account. For now, I want you to realize that there's a flow of information. So you have your stock account, which flows into your cost account, right? And you will notice that then moves into your work in process, namely your manufacturing account. So let's take a look at this slide again. Here you have your stock account. Okay? The buying of the goods, the buying of the raw materials that we're going to use to make our product. There's my stock account. That stock account will then be transferred to my cost account. So this second stage is internal. It's something that the company does internally. Understand? This one here, the stock account, is as a result of an external transaction. For an example, bought raw materials and paid for by check, or paid cash, or paid by EFT, 200,000 Rand. You're going to debit your stock account. Okay, here goes. You're going to debit your stock account, 200,000, right? You're going to credit your bank account because there's money leaving the bank account of the business. But this stock account here, once you've done all the necessary entries in the stock account, you're going to transfer the actual amount of materials that you have utilized in the manufacturing process into your cost account. So therefore, the flow of information is of extreme importance. From your cost account, you're going to transfer that cost to your work in progress or work in process, sometimes also referred to as the manufacturing account. Look at the name, manufacturing account. It has all the information regarding the manufacturing of the product. So this is important, accounting boffins. Remember, you have your external account, which is your stock as a result of an external entry. Then you have your transfer of information into your cost account, and then finally into your work in process or work in progress account. Okay. We've dealt with that slide. Let's take another example. You've paid your wages, or you've made provision for your wages via your wage journal or your salaries journal. So now you have this account here called salaries or wages, whatever you are paying, and you have an entry on the debit side of the account. There's my entry. Okay, what needs to happen with that salaries transaction? Notice that once you've apportioned that wage or that salary to its relevant cost component, watch, this here will go to different cost components. It will go to, one, direct labor. It will go to factory overheads. It will go to selling and distribution. So in other words, you're going to apportion that cost, which one? Salaries and wages, into the relevant cost component. Some of it, for those people directly involved in the manufacture of the goods, will go to direct labor. Those involved in the upkeep of the factory. In the factory, not making the product, but part of factory overheads. That cost component will go there, right? So obviously we have the third cost component, in this particular example of ours, would be the salaries and wages of our sales reps. So their salary component will go into the selling and distribution. Notice what we are doing. We are taking the salaries account and apportioning it to its relevant cost component. Is part of it direct labor? Yes. Is part of it factory overheads? Yes. Is part of it admin costs? Yes. So just depending on the information that you have at hand, you will then apportion that salary or that wage to its relevant cost component. Very, very important. Okay. By the same token, think of a building, right? In the building that you have on lease, a part of the building is occupied by the factory. Another part of the building is occupied by your showroom, where you're displaying or you're selling your finished goods. And the third part of the building is occupied by your admin staff. Clear? So this means, therefore, that rental that you are working with cannot all be paid by the factory, neither can it be paid by the showroom, nor can it be paid by the admin section. What do? You apportion the rental into factory rent. So take the rental figure, move it to factory overheads, and this is where we come to, here's your rental amount, okay? And here I'm going to use figures, but I'm going to use simple figures just so that you get the concept, right? So let's say we paid a total rental of 100. Obviously, that's not real. It could be 100 million. It could be 100,000, okay? So I'm just using the 100 as a simple example for you to see the split of the rental. Okay, this rental now, if you are told that 50 was for the factory, so there we go, factory overheads gets 50. right? The showroom uses 30 of that 100. So therefore, you'll notice that in your, we said showroom, so that's selling and distribution, gets the 30. And the admin section obviously gets the rest, which will be your 20. So can you see what we've done? We've apportioned 50 to the factory, 30 to selling and distribution, and 20 to my admin cost. So what have we done here? You can clearly see that the entire rental figure that was paid by the enterprise had to be apportioned in terms of the 3 cost components, or the 4 if you had a different one for your, say you had factory overheads, you had selling and distribution, you had admin cost, so you have apportioned it to the various cost component. Clear? Okay, so this means therefore, if you look at your factory rental, that factory rental goes to your factory overheads first, where you then accumulate all your factory expenses. Now the secret here, guys, is the moment you see the word factory, you know that that cost deals with the factory, and it needs to be apportioned to your cost component, namely the factory overheads cost account. Once you have done that and accumulated all your factory costs in one account, you will then transfer that factory overheads into your work in progress. So look at the flow of information from the rental account to the factory overheads, and from the factory overheads to the work in process account. By the same token, the rental of your selling and distribution, the showroom, will be transferred to the selling and distribution cost, and the selling and distribution cost will be transferred to your profit and loss. Why? It has nothing to do with the making of the product. Keep that in mind. Okay, so now you've seen what the flow of information is from one account to the next account, and then finally into the work in process account. Okay, guys, there's more interesting stuff coming up. So if you want to know more, you have to stay with us. We're going to take a quick break, refresh, and see you just now. Welcome back, accounting boffins. Remember, we promised you that we're going to do interesting work, challenging work, the real stuff, the real McCoy. Well, here it is. Watch. We're dealing with our new accounts, the ledger accounts. Now, this is what's examinable, and this is what you need to understand. But remember, whatever we've done prior to this is going to be assisting you in understanding the ledger account. Okay, and the first account that we'll be dealing with here is your raw materials stock account. Right. Number one, when you walk into a factory at the beginning of the financial year, right, you're going to find that you have raw materials on hand. Now, very simple. Let's draw on existing or prior knowledge. You have a trading concern and you have a balance of stock at the beginning of the year. Same concept. You have raw materials that you had purchased last year, in the last financial period. You haven't used it, so obviously that's your balance at the beginning for this year. So here goes. Here's my balance of my raw materials from the previous year. Okay? So obviously this tells you the explanation is stock of raw materials on hand at the end of the previous year, beginning of the current year. Got it? Simple. And now we're taking each item and we want you to understand each item. So please, guys, focus, focus, focus. Okay, now the second item says creditors control as my contra. That means obviously I had purchased raw materials on credit. Let's look at the accounting entry. You're debiting your stock account. Why? Asset increasing in value, therefore debited. You're crediting creditors control. Why? It's a liability increasing, therefore credited. So this tells you that this would be the raw material that you have purchased on credit. Can you see? Accounting is fun if you understand what you are doing. And that's what we want you to do. We don't want you to rote learn. We want you to understand the entry. And if you understand the concept, it's a piece of cake. And you know what's Ashraf's favorite? Chocolate cake. Got it? Okay. Next one. The entry is bank, right? And you are told, you can clearly see you debiting your raw material stock on the debit side. So a debit to raw material stock with your entry bank. And therefore, it tells you that that's your raw materials purchased for cash. Double entry, debit raw materials stock. Why? Asset account. Increasing on the debit side, a debit to raw materials, and a credit to my bank account because my bank account is decreasing. At this point, just let's stray for a while. What type of an account is bank? Bank? It depends. Why? Because if your bank has a favorable bank balance, it's an asset account. But if your bank account is in overdraft, meaning you are owing the bank money, then your bank account has a credit balance. Keep that in mind. I just thought about it because we're dealing with the bank account. So always take cognizance of the fact that your bank account can either be a debit or a credit balance depending on the situation that you are in. Okay, so we've dealt with that one. Let's go to the next one. Another bank entry. I wonder what that is about. Let's find out and see what it's about. Okay? It may be possible that you had paid carriage or railage or import duties. Now, think about your perpetual inventory system. When you are running a perpetual inventory system, remember this is now work that you've done already in grade 10 and in 11, right? So what are we saying here? Your perpetual inventory system, whenever you incur any expense on the stock that you have purchased, it increases the value of your stock. So therefore, by the same token, if you've paid carriage to bring your raw material to your factory, it's going to increase the cost price of that raw material. So therefore, a debit to trading to your stock account, namely raw material stock, and a credit to your bank account. So this here is then the entry that we are dealing with. Here goes. That's the bank entry of, and clearly you can see here that you are, in each of these cases, you are debiting the bank account. Once again, raw materials bought on credit, raw materials bought for cash, any expenses that you have incurred on your raw materials. Now, if you look at this particular raw material stock account, is there, before we come to that entry, direct materials cost, is there any other possible entry in this account? Think about it. And I want you to use prior knowledge. Think about your trading stock account in a trading concern. Do you have a situation sometimes where you return inventory to your suppliers? Yes, you do. By the same token, if we have defective raw materials, can we return it to our suppliers? Certainly we can. Can you see then? Then you're going to get another entry on the credit side here, indicating raw materials leaving our business. Okay? So keep that in mind. Once you've processed all of those transactions, right? We're now in the raw material stock account, and what do we find? That the actual amount of material that was issued to the factory, watch the choice of words. If you are given the actual amount of raw materials that were issued to the factory to manufacture the goods. That would then give you your direct material cost. Okay? And the balance, obviously, would be the materials that have been left over, which will form part of next year's opening balance. Okay? So in other words, what are we saying? We're saying that this is your balancing figure at the end of the year. Now, depending on how the information is presented to you, and I want to make you aware that sometimes you are given the direct material cost figure telling you this is the actual amount of material that was issued to the factory for production. Then the missing figure or the balancing figure would be your stock your stock of raw materials, obviously, at the end of the financial year. However, if you are given your balance of your stock of raw materials at the end of the year, then your missing figure will be the direct material cost component. I repeat, depending on the information that is provided to you, you need to see what information you have in order to determine what is the value of items issued to the factory for production, or are they giving me the closing balance of raw materials in my business. Okay, that deals with the raw materials stock account. What did we allude to earlier on? We said that 3 cost components would impact on the actual cost of the product, right? So therefore, if you look at your work in process stock account, I said earlier on, it's also sometimes called the manufacturing account. It deals specifically with the production of an item. Therefore, number 1, when you walk into a factory at the beginning of your financial year, do you sometimes find some goods in semi-state of manufacture? Meaning, they were not completed last year because obviously the financial year ended and you stopped at that point, and when your new financial year starts, you just move on. It's not a process of everything has to be completed. No, you're going to get some articles in semi-state of production. It means not completely manufactured. So that would be my opening balance in my work in process account. Okay? Got that? Great. Now, do you remember from our flow of information, we said that 3 cost accounts must be transferred to my work in process. Which are my cost components? Number 1, raw materials or direct materials. Now, this one I'm going to link exactly to our example that we've done here. Can you see? Can you see this direct material cost here? It goes from your direct material cost into the direct material cost account, and from there into my work in process. So clearly you can see your flow. This is coming from your direct material cost into your work in process account. Remember, this is an internal entry whereby you debit your work in process and you credit your direct material cost, thereby transferring the material that you've used in the manufacturing of the product into the manufacturing account. Got it? Brilliant. By the same token, you now take your direct labor, remember salaries and wages, move from there into the cost account, and from your cost account, where to? To the work in process. Eventually, you're moving your direct labor into your work in process account. Once again, what's my double entry? A debit to work in process and a credit to my cost account to close it and transfer it into my work in process account. Okay? The third component, right? We've dealt with that, stock of semi-finished goods. We've transferred the raw materials. We've transferred the salaries. Okay. Now you come to the factory overheads. Remember what we said? The factory rent, the factory water and electricity, the factory depreciation. All the indirect labor of those people working in the factory, all of those cost components are put together, remember, transferred into my factory overheads cost account. I now transfer the entire factory overheads cost account into my work in process. Double entry, debit work in process, credit my factory overheads. In that way, I've transferred the amount from my factory overheads into my work in process, and there you go, you have your factory overheads account. So you've brought in now all three cost components that affect the manufacturing of a product from the various cost accounts into the work in process. Which are they? How do we remember them? Direct material, direct labor, and the factory overheads. Okay, so we've brought them into this account. We've got our balance we've dealt with, materials, labor, and factory overheads. Now, this account tells you that this is the value of the goods that we have manufactured this year. And where do we take it to? We take it to our finished goods stock account. Watch. Simple. Remember here, accounting is about rationale, understanding what you are doing. You've brought in all your cost components. They are telling you at the end of the year, there's still some goods that are not completely manufactured for this year. That becomes your closing balance. That's this one here. So this year becomes your missing figure, and that, people, is your finished goods, which you transfer into your finished goods stock account. Okay. Remember we said the balancing figure at the end of the year, I referred to the finished goods stock account. So you've transferred goods from where? From your manufacturing account, from your work in process account. I'm giving you all the names: work in process, work in progress, manufacturing account. All of it is there. You then transfer the goods that are completely manufactured into a finished goods stock account, right? And then obviously you balance the account, and that will then give you the value of the closing. This one here will be your closing balance. That means next year's opening balance. So let's summarize what we have done. We've spoken about the cost accounts. You know what they are? Direct material, direct labor, and factory overheads. Those three affect manufacturing. Then we spoke about selling and distribution and admin costs. We said those go to my profit and loss. We spoke about the work in process in detail, right? We've spoken about the differences between fixed costs and variable costs. Just to recap, fixed costs are those costs that remain fixed, immaterial of your levels of production. And number two, your variable costs are your costs that vary with the levels of production. Okay, guys, that's it for today's lesson. Make sure you understand what we have done. And yes, we want you to practice, practice, and more practice. From me, Ashraf, and the team, keep your feet on the ground, reach for the stars, and we'll see you next time. Goodbye.